Hello folks, this is Mentor speaking. Welcome back to the 58th episode of the Luganda series Wanoku, this YouTube channel. So now on my screen, I have this structure here over this graph, and this episode, it will take something like 1 hour explaining to you the daily bias in detail. Ngatetu nagenda wala, we have the manipulation above or below previous days or previous day for liquidity. Now, eno is a better previous week, previous month, over previous year, over last year. Above the previous candles high and low, above the previous candles high, we have liquidity. Below the previous candles low, we have liquidity. So this is what we're going to do. There is something I want to show you in this same episode. Ngatetu nagenda wala, on the daily bias or on a daily candle, we have the Asian range, we have the London kill zone, and the New York money distribution. That is what I have on my screen here. Now, this is a candlestick in the middle. On the left-hand side and the right-hand side, we have both a black bar chart and a green bar chart. So, kino kikulaga nti on a bullish day, let's start with the bearish day, which is the black candle, the very first candle. On the bearish day, we have the candlestick form, more Asian range. Now, candlestick over the daily candle, te forming at midnight New York time. It forms before the New York midnight time. That is the Asian range. Yetandika akatale, okay? Now Asian range wetandika, that's when the candlestick starts forming. A candle does not form over tetandika to form at midnight, but it starts before midnight, the New York time. That is the Asian range. So that's what this episode is all about, to show you exactly when and how it forms. Let's say, for example, you've not understood this, the bar chart here. Tuberane Asian range, the open of the candle or the bar chart, then price rallies. Okay? Price rallies. That's why you have the manipulation above or below previous days or the previous day for liquidity. At midnight, New York time, we have the London kill zone that drops. Then at 8:30 in the morning, the New York time, we have the distribution. This is when we are bearish. We open, rally, then drop. Then close above the low of the day. Then, when we are bullish, we open, drop, rally, then just retracement katono, then we close. So there is something I want to show you today in this episode. The daily bias, how do you forecast? How do you tell where price is going? That's what this episode is all about. So let me show you here. Now here, we have the PDL and the PDH. PDL, which is previous day's low, and PDH, previous day's high. Let me just do this, more quotes. Day's high. Then okay, so njagadde chikola bwenti you really understand. Listen carefully. Listen carefully. This is what happens. On the daily bias, If we are to be bullish, about this green candle, this is what happens. The Asian range opens the previous day, manipulation at midnight, we drop, then we close. So this is what I want you to look for always. Chart. Before you find yourself kicked out, before you find yourself losing a lot of liquidity, which is a lot of money. If we are bearish, okay, if we are selling, if we are in a downtrend, okay, let's first look at the uptrend, because that's how the charts are arranged here. Bobangolimu uptrend. This is what you want to see. You want to see price open ku green candle in Ojolaba, this green bar. Let it sell below the previous day's low. And I will show this to you on the charts, both a daily, weekly, monthly, and maybe the other time frames. Price opens where it closed the previous day. That's where the new candle starts. It opens there. If we are to be bullish in an uptrend, we want to see today's candle open, trades below yesterday's low, trades below yesterday's low, then rallies. Okay? This is how I want you to predict, to forecast price eragawa. Bwetubanga tuli mu uptrend, netufuna red candle. This is what I want you to do. Bwetubanga tuli mu uptrend, netufuna black candle, or a red candle, or a bearish candle. Let's open, trade below that low for liquidity. You're looking for a half past midnight, the New York time, to trade below this low. Once we do that, at around 3 a.m., at around whichever time, as long as it is past midnight, because that's when I want to see these things happen. You're looking for opportunities to enter the market. You're looking for opportunities to enter the market. When you look here, the next day, if we are bearish, botubanga tutunda, if it's a downtrend, I want you to focus on the green candles. Let's open where it closed, rally above its high, or the previous day's high, which is the green candle here. As soon as we trade above that candle, you're looking for opportunities to enter the market. You're looking for opportunities to sell. You're not looking for opportunities to buy once we run above a high. The previous day's high in Gatulimu downtrend. I will show these things to you on the chart. After that, you're looking for opportunities to sell. Okay? You're only looking for opportunities to go short. Now, this is a bar chart. Let me show you a candlestick. So, on my left-hand side here, ninayo candlestick here. Ngenda kutwala ku chart, I show you these things. This is what we have here. Okay, this same thing represents this. Here, what do we do? Well, we're going to use this candle okufuna the exact definition or the exact concept. So let's look at the green candle. If we are to be bullish this day, we opened here, traded below the previous day's low, then rally. That is what I want you to look for. I want you to look for a candle that trades below. It must trade below first. Trading below. If it trades high, that day we are selling. But we so can trading awansi for liquidity. The bias is bullish. The bias will be bullish. Kanchiddemu bulungi ngambye. If we open here, we sell first. Below this low, below the PDL or the previous day's low, waliyo liquidity. This means that smart money first traded below the previous day's low for liquidity, then rallied. And the other thing is this. Let me show you another thing. If price opens there and rallies, this day we are bearish. We are going to sell. Omutegedde bulungi? If price opens there, nesoka eyambuka, at least 50% of this candle, we are going to sell on that day. This is the manipulation wagulu. Then that means tujabera bearish. Let's look at this same concept here. If price opens right here, rallies wagulu above the PDL, sorry, the PDH, which is at the previous day's high, the bias is bearish, more downtrend. If you find such a scenario, more downtrend. And the other thing is this. If you find such a scenario, more downtrend, we open, trade below the previous day's low. The bias is bullish, not bearish. We need to attack one side of liquidity first. If we kick these people out first, we are buying. Sorry, we are selling. If we trade above the PDH or the previous day's high, the bias is bearish. Kankulage another example here. Without the highs, without the wicks, I mean. Now let me say price opens there, trades above. At least 50% of this candle, you're going to look for opportunities to sell. You're going to look for institutional levels, you're going to look for institutional candles, you're going to look for areas of inefficiency or imbalance for that area to first be balanced, then you sell. Jetusoko okulaga ye manipulation. If price opens, it is tricking you that it is buying. That's not what is happening. There are so many things happening in here. Byotana kutegeera byebali kukolako. Katugende ku chart. I show you these same things happening. Let's look at the euro dollar. Let's look at the dollar yen. Let's look at the dollar yen. Daily chart. So remember what I told you. Remember what I've just told you. The bias is, let's start from here. The bias is what? Tandikire wano. If we are to be bullish, bullish means uptrend, buying. I want to see price open, the next candle, goes down first, then I look for opportunities to buy. Let's play. Opens here, trades below, then goes above the previous day's high. Let's look at the next candle. If we are to be bullish, again, I want to see price open here, trades below, then buys. If we are to be bearish, I want to see price open here, trades above this high, then sells. Let's go. We all know a green candle opens, drops, then rallies. Then one, if we are to be bullish, I want to see the same thing happen. If we are to be bearish, I want to see a candle open, trades higher, then sells. Very good. It opened here, rallied, then dropped. Then it closed there. Very simple, folks. Very simple. It's a simple strategy, but abaji full are complicated. Bebanji. The next candle, if we are to sell, I want to see price open, rally, then we drop. I just want to see it open, buy, then we look for opportunities to sell. If we are to buy, I want to see price open, drop, then we rally. Let's go. The same thing happened. It opened, dropped, then neyambuka wagulu. The same thing keeps happening over and over again. If we are to buy, I want to see price open, drop, then rally. What do I mean? I want to see price open, come down, give us a wick like this one, then a green candle or a green body. If it is a sell, I want to see price open, first give us a wick, wagulu, then a drop, 1C. So the same thing keeps happening over and over and over again. The same thing keeps happening. Kubuli time frame, kubuli candlestick, everywhere. So let's go. This one opened, dropped katono nyo, then neyambuka. So that aside, I want to show you how this thing forms. At what time does it form, and what exactly should you be looking for? So this is what you need to do. This is what you need to do. I want you to mark. Now, if we are looking for the London, we are looking for the Asian range, high and low. According to the 57th episode, we talked about the Asian dealing range high and the Asian dealing range low. So twagala tegere dala, at what time does the Asian session open? Asian session egulawo sawa meka. Because already twategede, the New York session opens at this particular time. We look at midnight, the New York time, till 11 o'clock in the morning, the New York time. How about the Asian range? Because jukira nkugambye nti once a candle opens, we want to see it trade lower. If it is a buy, then it rallies. Then if it is a drop, just like you see here, it opened here, rallied, then yabade drop. So I want us to look for the Asian range, egula usameka. Now Asian range etandika sawa 11 chitundu is a New York time. 1700 hours, a half past 1700 hours, a half past 5 p.m. the New York time. We are looking at the Asian range, the Asian dealing range high and the Asian dealing range low. Genda ku 1 minute chart, we mark as a sawa, okay? We are going to mark the 1700 hours, oba sawa 11 chitundu is a New York. Okay, let's do that. 1 minute chart. we look at sawa 11 kitundu New York. So here, this is 3, this is midnight. So let's look for sawa 11 kitundu. Come here, we are marking the Asian dealing range. We are not marking the New York midnight. 11 kitundu or girete kusawa 11 right there. Let's have 11. Let's have sawa 11. So whatever you see here, this is the New York, so the Asian range. Now, let me remove kano kalaini kange nkulage. You see this gap here between this and this. This is when the market opened. The Asian dealing range opened here. Binebye mabega tetwagala manya. Now we are looking at the new day. We are starting there. Price started there. Ebye mabega tatusoke tubikweke tutandikirawo. So we are looking at the high and the low between 11 and midnight. We are looking at between sawa 11 ne sawa mukaga. So between that line, between this vertical line and the next vertical line, we are looking for the dealing range high, the Asian dealing range high and low. Let's go. This is midnight, right there. Ow. So chino chetuina wano, this is the Asian dealing range. What the accumulation? To be exact, this is the accumulation. From here to here. That is the accumulation. Now, we are looking at price rally above that high for the London kill zone or below this low. You see that? I don't want zino concepts zikubuzabuze. I just want you to know exactly what we look for. We look for the dealing range high and the dealing range low between sawa 11 New York and sawa mukaga ezekiro New York. We are looking at a high and a low to be taken first. Here on this day, we haven't taken anything. We haven't traded above the high or below the low. But do we have a manipulation? Yes, we do have a manipulation. Where is the manipulation? Look at the open price at midnight. Okay, go back to the 56th episode. I don't want to mix up concepts because sagala video mpanvu. I just wanted to explain to you what you look for. If price opens here, this is the new day, this is another candle forming. If we are to sell or if we are to be bearish, I want you to look at the highest high before this. Nchidamo, I don't want to confuse you. I want you to look for the highest high before this. Labe mabega, we have this high. This is Friday's high being taken by which high? The Asian range. Traded above that high. What does it mean today? We are going to be bearish. Why? We first opened here, traded above Friday's high because it's a Monday, June the 5th. We opened there, rallied above. What does it mean? We're going to sell. And are we selling? Bwotunuulira chart yo, we are selling, we are not buying. Okay? Let's look at another example. Let's look at the euro dollar. Let's look at the euro dollar. Again, what are we marking? We are marking sawa 11 is a New York. We're looking at the dealing range high and low. Okay, the New York, the Asian dealing range high and the Asian dealing range low. So what exactly are we looking at? Well, we are marking sawa 11. Sawa 11 right. Okay, right there. Okay, let's see. This is 11 mwenda. Okay, that's where price opened. That's why I prefer 11 chitundu, but let's look at 11. So this is the Asian dealing range high and the Asian dealing range low. Okay? You are looking at the Asian dealing range high and low between sawa 11 is a New York ne sawa mukaga ugwichiro New York time. Let's mark sawa mukaga is echiro. I'll show you what to look for exactly. So on the euro dollar, which is the highest high and the lowest low? Lowest low, highest high. You mark that high. You also mark this low. But remember, twagambye, if we trade above the previous, if we open, netulaba pricing it is dropping. If it first drops below the just 50%, if price opens, then drops, that day we are buying. If it opens, then rallies, that day we are selling. Nchiddamu bulungi. If price opens, ku dealing range, high and low eya Asia, over the Asian dealing range high and low. If price opens, netulabanga, it trades to at least 50% of the previous candle's high or low. We are doing the opposite. So here, price opened, traded below, at least to 50% of the previous candle's high. Sorry, the previous candle, Friday's candle. What is happening? We are buying. We are bullish. The dealing range high and the dealing range low. These are the things you look for. Between the Asian dealing range high and the Asian dealing range low, you're looking for the bias, the daily bias. If we are to be bullish, the Asian dealing range low must at least trade to the 50% of the previous candle on a daily chart. If you go back to this concept, you're going to understand better. If we are to sell, want to see price open, a rally, then it is a drop. If we are to buy, want to see price open there, then drops, then it's going to be bullish. And that is what is happening here. You don't need indicators to show you exactly what is going to happen. All you need is, as soon as price opens here, sawa 11, soko olabe what it is doing. Now, you might not be awake by that time because it happens sawa musanvu, munana, mwenda, kukumi, eze Uganda. So at that time you are sleeping. Okay, at that time oli mu buliri webase. I hope this was insightful. Let me stop this video from here. We make room for other episodes. Now, if you have any question on this, leave a comment below. Or again, I'm a Telegram group. Or you inbox me, I will answer you. We're still moving on with this same concept. Tuchagenda maso with this same concept. The daily bias, what you look for, what to avoid, and what to do.